My name's Kobe Harper. I guess I've known Lisa because our two boys played t-ball and other soccer and you name it. So I've probably known them close to 20 plus years and got to know Skip ever since they've gotten married. I didn't recognize him this afternoon when he came in. He had hair back then the last time I saw him. But anyway, I'm really thankful for being here. But back in the fall, and really how this whole thing started was, I was meeting with Lisa and we were talking about how to give these eternal lifelong gifts to keep a charity from going on. And there's a professor, his name's Russell James, he teaches at Texas Tech University, and he's, if you want a financial planning degree, that's the best place to go there, or Indiana University. But anyway, so I was showing him these books. He said, well, you need this book. It's called The Biblical Fundraiser. And so anyway, I bought the book. So when Pastor Woods, if I call you doctor, excuse me, last year, January 17th, I went in to have a heart cath. Ended up having triple bypass surgery. Also, I have AFib and SVT, 2 types of irregular heartbeat. My priest, Smokey Oak, said I cheated death last year 8 times. So I know the good Lord has a mission for me. But, so anyway, I've been doing this May 1st of this year, 44 years. I'm a chartered life underwriter, chartered financial consultant. I work, I'm a member of the $1 Million Life Roundtable. It's an international service organization. Excuse me. And so basically there's 3 levels. First level, core of the table, top of the table. I'm a top of the table producer. So I work with people, I help them enjoy their wealth. And I guess that's that. So I hit this little button there to go for it. Well, I didn't do it right. Oh, there we go. So the book, The Biblical Fundraiser. I was, as part of all my, I did all my rehab work at LeConte Medical Center in Sevierville. They had a cardio rehab. It wasn't much bigger than this room, so they built a new facility. Some of you may know Linda Ogle. She gave a lot of money. I gave some. So anyway, they had appreciation. The Covenant Foundation had a donor appreciation down at the ballpark back in November last year. A gentleman named Mr. Storm. It's the concrete plant up there in Danridge New Market, the Quick Ride or whatever it's called. He read that scripture, and that changed my whole life of not just trying to tell you about how charitable life insurance works. And so if you read that, command those who are rich in this present world not to be arrogant, nor to put their hope in wealth, which is uncertain, but to put their hope in God, who richly provides us with everything for our enjoyment. Command them to do good, to be rich in good deeds, and be generous and willing to share. In this way, they will lay up treasure for themselves as a firm foundation for the coming age, so that they may take hold of the life if truly life. So basically, taking what Pastor Wood said, there's 3 types of givers. There's the hoarder, who, he had a barn, now he wanted to build the Superdome. Then there's the prodigal son, wine, women, and song, and blew it. Or there's the joyful giver. So that's what I do. I help people enjoy their wealth. So if you give, like from your abundance, you're going to come back 100 times, just like the good Lord says. These next couple slides, and I'll be brief with these. Charitable owned life insurance. I mean, you may have an insurance policy that maybe it served its purpose. You could give it to an existing policy, to Wares Valley Ranch or any other charity, and they become you give them the ownership. Now they're the owner and beneficiary. So at your eventual passing, they get the money, whatever the face amount may be. Okay? Then, okay, now, the next ones are, you name the beneficiary, etc. There's all different types of permanent life. You want to do permanent life insurance. Term insurance doesn't work. I'll be 75 in November. I can't buy term insurance anymore. Plus, I'm uninsurable. But anyway, so you have your traditional whole life products. Usually like New York Life, Mass Mutual, Northwestern Mutual, those mutual companies, that's who provides those type of contracts. Then you have universal life. That's basically, it's like a permanent insurance, but I call it term to age 100. So you fund it to, whatever. So basically it doesn't build very little cash value. We don't sell those interest sensitive much anymore. Variable life, it's called now variable universal. It's like mutual fund life insurance. So you have a death benefit, you put in all different types of sub-accounts. Equity index, we don't do that much anymore. And then the last, I guess it would be the index UL. So basically it's an index, most common one is S&P 500, okay? So basically when I work with my clients on, and then over the years, we've probably written over $25 million of death benefit, charitable life insurance. And out of those, we paid off about $5 million in different charities. And some of those policies, we've used over $2 million of cash value that they use to fund different opportunities within those different organizations. I'm currently working with my fraternity, Phi Sigma Kappa, and their fundraisers to do this. Also, I'm working with the Alpha Tau Omega Foundation. Basically, ATOs, I don't know how many years ago, anyway, they had about a $5 to $10 million corpus. They went out to their brothers. They bought, they bought it. Well, anyway, they bought a bunch of life insurance. Anyway, their corpus is now over $20 million because people passed away. So it's a way to grow the corpus. Last summer, I played in a charitable golf tournament for Aeromont in Gatlinburg. I'm sure everybody knows who RB Summit is. Pat's, ex-husband. So he asked me how we play with my team. We didn't win, obviously. So did any of y'all know Margaret and Earl Worsham? There's no telling how much money they've given in Sevier County, Knox County, and all over the country. So so I had a unique situation. I first met them about 15 years ago. My wife was the executive director of United Way in Sevier County. So I met them one night and came close to them. RB's first words. She had just passed with breast cancer. She'd been fighting about 4 years. Well, anyway, did you sell Margaret any life insurance for the benefit of Aeromont? No. Well, I couldn't because of my wife. I mean, I probably could, but I didn't because I thought it wasn't the right thing to do. So whenever you give your monies to Wares Valley or church or whomever, whenever you pass away, the money stops. So here's a way, using life insurance, to guarantee wherever you want to give that policy to, but hopefully it's Wares Valley Ranch, that it lasts forever. Okay? So basically, you have three beneficiaries. Here's your assets. There's your family, the charity. Well, obviously, you don't want to go to Uncle Sam. And just like Andy said, if you have a retirement account, he's your silent partner as we speak. So basically, this is a hypothetical thing that, let's just say somebody wanted to give $1 million to Wares Valley Ranch. So this is based on not the big, beautiful bill tax deduction, but the previous bill. So I give $1 million. My net tax is about $550,000, my net cost. So I'm going to write you that check to Wares Valley Ranch for $1 million. You're going to go out to an insurance company, apply for a policy on my life based on a standard underwriting. It's going to purchase $5.5 million single premium life insurance policy. I pass the next day, it goes to the charity. Okay? Now, I'm sure Andy's the same way. He works with his clients and my clients. It doesn't matter if we're doing charitable planning or estate planning or whatever it may be, there's a process. So you want to get that together, what are your goals? Why do you want to support Wares Valley or whomever? Find out what your passions and your concerns are. Then we design the program. We work with your financial advisors. We could work with Adam, who's a tax attorney, your CPA, whomever. So we want to work as a team for your benefit. And then let's just say, hypothetically, we do business with you today. This time next year, we're going to do a review and see where we go from there. This one shouldn't be in here, but it's, because I know Pastor Woods doesn't like debt. But if premium financing is used a lot of times for estate planning, business succession. You can also very carefully, if you do it right, for charitable life insurance. And you got to have the right person to do this. And I probably shouldn't have it in there, but that's basically, I'm going to talk about that because obviously you don't like debt. But it wouldn't be your problem, it'd be the donors. But anyway. This is assuming that a foundation has a $16 million corpus in their foundation. So basically, we're just doing a 2% charitable multiplier. So assumed an 80-year-old standard non-smoker male, it would buy a single premium, $453,000 death benefit. The carrier would be John Hancock. I represent all the major life insurance companies in the U.S., but they're the most favorable when it comes to underwriting charitable life insurance. And one of the kind of number one requirement is you got to be a patron of that charity. You just can't somebody walk off the street and say, you can't do stranger-owned life insurance. So anyway, we're using your money. You're the owner premium payer, the beneficiary. So it's one premium paid. I pass the next day, so put in $320,000. You gained $133,000 on top of your corpus, okay? And that's it. Any questions?